All right, so we have our class about liquidity. So we're going to understand how to mark out areas of liquidity, why markets move in the first place, where stop losses exist, right? We got to understand that liquidity rests at highs and lows. So let's jump out of this 1 minute into a higher time frame. Okay. So one thing I really want to stress about when it comes to understanding liquidity is that liquidity rests at highs and lows. So as you can see, we have highs, right? We have lows right here. Market is taking out these highs, looking to then travel, taking out these highs, looking to travel, taking out these lows, going up, taking out these highs, going the opposite direction, right? And what we like to think of liquidity is areas where stops exist, right? So imagine taking a sell. It's still like this, right? So this is the most basic and I guess simplistic way to think of trading, and hopefully you're not doing this. But imagine you see this red candle and then you're like, okay, we were green, green, green. Now I want a red. I want to sell, right? For no reason. Some people could have reasons, right? Some people trade support and resistance. They can see this as a reason to sell, right? But hopefully your stops are at the right places, right? But let's just assume you're taking a sell right this and your stop is not at the right place, right? You have your stop above this high right here, right? You don't actually determine where you're putting your stuff because some people are undisciplined like that, or their system is not advanced enough for them to actually give them proper entries and exits. But look at that, right? So what liquidity pretty much is areas where people are placing their stop losses, right? So imagine someone's stop loss is here, right? Around here, around there. Price and market is drawing to that, taking them out, giving us fuel for price to actually continue the actual move that it wants to take, right? So thinking of it like that, look at all these other areas, right? We have liquidity right here. Price takes that, continues its move down. Liquidity right there. Price takes that, continues its move up. Liquidity right there. Price takes that, continues its move down, and so on and so forth, right? So as you can see, market is playing on liquidity, taking it, going in a move that it wants to actually take, and the moves that it actually wants to participate in. And that is how liquidity is moving the markets, right? So first thing we got to be able to do is identify our highs and lows. So make sure we're looking out for these highs and lows. I like to mark out the exact highest wick. So find out these highs, find out these lows, and mark them out. And we take these as a trade on trade basis, by the way. That's how I do them. So we're not looking at nothing like this. This is too crazy, right? So we're not looking at anything like, oh, liquidity right here. And it's true, it is liquidity still. But I like to, because we're day trading, right? So we're trading in the moment. We're not using something from, all the way over here to then participate in the markets all the way over here, right? Even though it is valid, I'm not saying it's not valid. I'm just saying for your style of trading, since we're day trading, that's not how we do things, but that's not how I do things. But yeah, so with that being said, we know that that's where it's laying at, right? Then we have things like equal highs and lows. These are even stronger areas of liquidity. So imagine we have a high that's pretty close to another high. So like right here, right? So we have this high, which is pretty close to this high. And as you can see, price is more inclined to run to these levels as well, right? Taking out people that could have placed stops right here and then continuing its actual move. Okay, so these are just areas of liquidity. So what you're going to do, and we like to map out our liquidity on the 4 and the 1 hour chart when it comes to identifying highs and lows. Something you got to understand is that higher time frame has higher power as well. So these higher time frame liquidities, they're going to hold more power than compared to a 5-minute liquidity, right? So on higher time frames, we can actually expect market to run these levels and most likely respect that, right? And then continue distributing in whatever direction it wants to go in. Okay, so institutions, they need liquidity to fill positions, right? So like I said, people are placing their stops in certain areas. For us to actually convert and make the actual move that we want to make, we are looking to grab liquidity at these highs, right? Guys, liquidity exists everywhere on the market. You can literally start drawing it right now, right? We have a low right here. Price takes that, starts pushing up. We have a high right here. Price takes that incrementally, right? Gaps down. This is still price moving downwards, right? And then continues up, right? So understanding this is very, very key, right? So price takes liquidity, pushes down, right? Okay, cool. Now, this ties into confluences as well, right? So I know what you might be thinking, well, what about these areas where price is taking liquidity and nothing much is happening, right? Which is kind of rare, but there is going to be places like that. Just like anything else in trading, nothing is actually 100%, right? Well, this one, what do? We take liquidity, we start distributing downwards. So you can see it around the map. But even if price is taking liquidity and nothing's happening, what do we have to remember? We trade with confluences, right? We're not just trading because price is sweeping a low. So look at that. It's not that, okay, we sweep this low, so I take a buy. No, we trade with confluences. We need multiple reasons to actually enter a trade. And that is how we actually trade effectively. Okay. So like I said, we look for our liquidity on the 4-hour and the 1 hour, right? You have to also learn about fractality of price, meaning price is price within price within price. So if we're buying on the 4-hour, buy on the 1 hour, buy on the 5 minute, stuff like that. Hopefully you also already know open, high, low, close of a candle. If not, I'm pretty sure we'll cover it later within. But just understanding that candles open, they have distributions, then they close like this green candle, right? We open, we go down first, we go up, then we close right there. And then like a red candle, right? Motion for red candles is we open, we go up first, we go down, and then we close. Okay, so that's just something to keep in mind. Hopefully I go into depth with it more. But if not, it's practically really simple. Like I just explained right there and right there. That is the open, high, low, close of red and green candles, buying and selling candles, whatever you want to refer to them as. Okay. So price runs these stops, then tends to reverse. That's what we classify as liquidity sweeps. There's stuff like fake breakouts as well, right? So like right here, as you can see, we have a liquidity point where price breaks out of it. And some people think that, okay, it's breaking out, it's closing below, it's not, whatever. But as you can see, it's a fake out and price continues buying. That's why we are needing to pair these things up with other confluences. So we're not just taking this low and looking to buy. We're actually giving ourselves multiple reasons to enter a trade and participate. And that is how we increase our odds when it comes to trading. Okay. So there's also session liquidity. This is a very big one. I want to point this out. To make this very simple, I'm also going to give you your first indicator that I find is acceptable. We don't use indicators for real. So when we do use them, it's because I feel like they are needed and they are acceptable. And that is going to be the ICT kill zones and pivots indicator. Okay. So you're going to add that indicator. You're going to go ahead and just copy these settings. I already had it. Crazy. Let's go ahead and make that visible. Okay. So we're just going to go ahead and have that up. I'm going to show you the settings. Let's drop this down to like the 15 so everything's visible. Okay, perfect. So these are the settings for the indicator. Okay, so just go ahead and make these changes. These should come as they are. Keep this like that. I am right now on -4, so New York session time, but I'm pretty sure these will auto adjust. But long story short, you want these to be in these certain points, right? You want your New York session open to be 9:30 a.m. if you're in -4, 8:30 if you're in -5, and whatever. Just make sure you're matching them up, right? So you have that. And then one thing you're also going to turn on is going to be right here. It's going to be unchecked at default. You're going to check that. Then once you do that, you can save this as a default. And then this is the first indicator that we're going to have on our chart. What this indicator does is simply, also let me change the color of this because blue is also blue. So let's make this something else. Okay, let's make this like, oh, we have green already as well. I don't want this to be ugly though, because we don't want a lot of random colors. Okay, well, let's just do it like this for now. Okay, cool. So what this indicator is going to do for you is it's going to map out all these session liquidity points, right? So the same way we were drawing those highs and lows as liquidity, we also have something called session liquidity, right? So Asia high, Asia low, London high, London low, New York session AM high, New York session AM low. I usually have this unchecked, right? But for the sake of this video, we're going to leave it on because this is where we're actively trading. So we don't need liquidity points for this because it's obviously going to be where we're trading as well. But the previous daily high as well as the previous daily low. These are our areas of liquidity. And how are we going to use this? So it's very simple. We're going to look for price to take out these levels. So we're going to sit on our hands until that happens. And when that does happen, we're going to then pair up all the confluences that I've talked about before. And I'm going to go more in depth with as the series continues. But we're going to pair that up with this and look to take a trade. Okay. that is going to be how we're going to use the session liquidity. And yeah, liquidity is fuel for price movement. So I just want to show a quick example real quick. We're going to keep coming back to this trade because that's exactly what happened. So the trade for today, okay? So our trade for today, as you can see, I already erased it, but we had some couple confluences, right? So we had SMTs right there. We had this fair value gap right here. Why do I keep drawing this inverse gap? I guess I can't wait to show y'all inverse gaps, but this fair value gap right here, right? We also had the fact that NQ didn't break this high, but ES did, which means it's a correlating pair. Okay, cool. So let's see what else we have, right? So this is just basic trade confluences, right? The ones that are actually getting us into our trade. But where does the liquidity play a part into, right? Liquidity is going to be part of our the part of our trade that tells us the direction that market wants to go in. So let's go ahead and look at our correlating pairs. So we have YM, for example. Look what happens in the morning during the New York session time on YM. We're sweeping London session lows as well as Asia session lows, right? So we're taking out liquidity. We're taking out fuel for price movement so that NQ and ES can do what? To continue buying, right? Because these are correlating pairs, okay? We'll go over that more when we need to, but that is our fuel. So let's look at it. So around this time right here, right? Around this time, because time matters when it comes to trading. Also going to go about that. Around this time, NYM takes out those lows, gives us a reason to take a trade because we're taking liquidity, right? Okay, we're taking liquidity, and then NQ and YM is giving us SMTs as well, which is another confluence, right? And this indicates pretty much correlation with price, and it's a form of, like, I like to say it's a form of future telling, right? Because NQ is taking out these lows, and another pair is not taking out those lows, and what that signifies is that, okay, one pair wants to go up while the other pair is right now lagging, but it's going to follow. Okay, so we have that at the London lows. You see how this is starting to stack up. So we have SMTs at the London lows with a fair value gap while price is breaking structure on ES. Okay, this is the only annoying part of trading futures, is that you're correlating three different pairs. So you're going to be switching and looking at three different things, but it's the price to pay to be profitable, right? So as you can see, we break structure. We have that same gap, but NQ is actually the pair that drops into that gap, right? So NQ falls into that gap, and that's how we were able to take our trade. And yeah, okay. Great. So that's how we were able to use session liquidity to formulate this trade, right? We're obviously going to go more into depth on how to do everything just step by step, but that's just showing you the importance of liquidity and how it was used in real time. And yeah, so next we're going to get into imbalances. Catch you in that video.